I know there's like all kinds of questions scattered throughout the chat and whatnot. I would say if you let's take questions officially at this point forward in our community thread, the intensive group chat. So if you had previously posted one and you want it answered, you know, repost it or post a link to it or whatever. So we'll kind of take those on a first come, first serve basis here. Real quick, before I hop into the questions, first question was Chick-fil-A sweet tea. No, we got a little cookies and cream milkshake here. Now the important stuff is answered. Real quick update on what I did, just briefly. If there's more questions about that, we can get into it. We are going to cover it. Not a lot to cover for the review today, but we will cover it. So keep that in mind as you consider asking questions about the trade sequence of mine. If I can figure out how to share the screen, we'll do it. There it is. Okay. So with this probe lower, we got below delta neutral, as I'd mentioned, unable to get past it, really, really weak buying here. Well, what don't we have? For me, that's acceptance below the CVA, right? So that's right here. That's what this line is. So rhythm, probe here, probe there, here, there. So, I mean, it's almost half the rotation. In my mind, it was not really acceptance below. What was the quote unquote tiebreaker? What word do I use? What tool is often a tiebreaker for me? Order flow. Order flow was super weak on the attempted leg up. So I chose to get aggressive before what I felt like was a clean hold below the CVA. So that's what we call acceptance, and some clues there for reading acceptance. So I didn't feel like the acceptance was there. I took the trade anyways, which is a compromise. Order flow said, you're good to do this. Let's go with this imbalance. The buyers are super weak. I thought perhaps there was a stop run above those highs, and I scratched it and re-entered immediately. I got scales. Let me get rid of some of these drawings because it is hard to see. I got a few scale outs right there. And then I actually scratched the rest of it. Why did I scale out quickly like that? That's because I'm respecting the fact that we're still above, technically above this composite value. So, or composite value low, that is, still inside the CVA. So I scaled pretty quickly and I scratched pretty quickly. I demanded that to work cleanly, to work nicely, else I wasn't going to be involved at all. And then I took a momentum re-entry scalp type entry, which is right here. Okay. So that quick little, okay, I got stopped. There was really nothing much to that. Here comes the sellers again, piling in. Let me join them with a tight stop. Momentum entry. It's got to continue dropping or I'm gone. And in this case, it continued dropping. Took some initial quick scales on a bit of a pause. Took my second of the 2/3 scales into the -2. That's when I posted to you guys what I'd done because I was busy as I was trading this. And then, quite frankly, I went and got a milkshake and had a stop back above this CVA level, back, you know, kind of into the developing value. And as I return here, I'm stopped out of that last small piece, less than a third technically of the trade. So not, you know, nothing fancy there, but that was the logic for doing what I did. I took a few notes. IPB early on hypo 1 acceptance, but order flow is weak. Scratched as the highs were vulnerable, re-entered, scale out to respect the composite value low, given that they have a compromise in the acceptance picture. Scratched the remainder on lack of follow through from buyers. Pressing. Wait a second. Scratch the remainder on lack of follow through as buyers were pressing. And then I didn't write any notes for that momentum reentry. Some quick scales into the -2, and then now stopped on the remainder. So we'll do a full review of that sequence and whatnot So anyways, I always want to update you guys on everything that's been done as we enter this Q&A meeting, in case you have questions you want to get addressed about the sequences, because we really don't do Q&A in the review. The review is, again, time for you to just listen in on me doing my review work. With that said, let's start with the questiones. Trader Biku says, Merritt, can you talk about the role that order flow plays in your trade management? In what contexts do you lean on it more heavily to make management decisions? In what context might you weigh it lightly or disregard it entirely? Do you ever take scales based on order flow signals? Thank you. Great question. I teach this in every single advanced group mentoring class. In fact, I teach this in the course. So you might be disappointed with my answer here, but my students, my AGM students, know what I'm about to draw here. It's a little playground, little seahorse. What's it called? Sawhorse? What's it called? Can't even think. A sawhorse is what you work on. It must be a seahorse. I don't know. We'll see what you guys say in the chat here in a bit. So, you know, it's the little kids, they play on it, right? Like one kid straddles this end and press goes down while this kid goes up, right? And then this kid kind of pushes his feet into the ground and goes up while this kid comes back down, and they repeat kind of doing that. Well, you might say, Merritt, what's in that milkshake? What are you drinking, buddy? How does this have to do with context and order flow? And the answer is, quite simply, there's an inverse relationship between strength of the narrative and order flow usage. Okay, so if the strength of the narrative is up real high, my order flow usage and importance and the role that it plays in trade management, whether or not I lean heavily on it, lightly on it. In this case, I'm going to lean more lightly in general on order flow. It still might come into play for some things, and we can talk about that. But the strength of the narrative says this trade idea, Merritt, is so good. Let's not allow the shorter term, the nitty gritty, wonky order flow, whatever, to disrupt being a part of it. In fact, it may not look so great. Let's put risk on despite that order flow. If, however, such is the case of my trade today, what was the situation? We'll still have the narrative side here and the order flow side here. Well, the narrative was really weakened because what? It wasn't really ready yet, right? NADRO, we had an idea of the N, but the A wasn't there yet. We didn't have acceptance below the level yet. Order flow dictated that I make a compromise. It allowed me to make a compromise with the acceptance read right here. The order flow became very important. If the order flow wasn't good or there was a lot of buyers coming up off that low there, there's no way I'm taking that trade that I took, right? But because the narrative, or at least the situation, because I didn't even really have the narrative yet, was weak, I needed or put more importance, or as you mentioned it, the role that it played was much bigger in that decision making there. That is the best advice I can give you with use order flow strongly weekly with stuff. Now, you know, to get more specific with your question, what role might it play in my trade management in general? You know, when I get, well, here we go. There's more from today, right? The scratch remainder on a lack of follow through, and then the buyers came in, right? So let's zoom into this real quick. So this is from the point of reentry. We press down into the CVA level. and they can't break through. At this point, even from a price action perspective, I'm getting a little concerned about the potential for this, right? Inverse head and shoulders. But the point is that this is the lower edge of balance. This could be excess, and then we could hold a return pullback, right, back into there. So I'm concerned with that first and foremost. But then we get to the lower edge and we see the buyers respond right here, especially when they are pushing up against those highs, like really all the way there. I thought, that's not what I want to see. Let's stand aside. We're compromised here. So we're not going to take additional risk. We're not going to stick around and find out. It doesn't look good. We're not breaking the level down, which I'm demanding that the market do based on the compromised position I was in. So anyways, those are some really good order flow things, some from today, some from general, stuff. And I hope that was helpful. Brandon, what's up, buddy? Brandon says, how are you managing your trades with your simplified trade management with 3 scales? Do you have a set thing you're looking for on every scale? It's just pretty generic, pretty stock type of thing. It's going to be an excursion with rhythm, with direct momentum, as long as there's not like I put myself in a position of compromise. These are the scales that make sense here into a rhythm move from this all the way from this swing high, regardless of where I got in on the third entry, right? This is a nice rhythm move into a nice extreme for the session. It's a place to get scaled. The next place to get scaled is going to be into the next potential area of resistance, right? Whether that's below us or above us, just resistance to impeding movement. And so I mentioned those next levels that I'd be looking at and whatnot. And then the third is going to be for imbalance to hold, if appropriate, destinations for the general trade idea to be held, if appropriate, more of a core position if the situation warrants it, right? So that's really it. It's rhythm and DVA. Second scale is potentially an additional DVA location, for example, if rotational. Let's say I got scaled in rhythm into VWAP. The second scale would be the opposite extreme of DVA, right? And then the third scale would be more narrative target-based. 12:15 Eastern, if the market regains the composite value low with development value low being there now, would that be a failed breakout pullback of the composite value low? Could we play a return pullback there if we accept the CVA again? Would this be stronger because the breakout did not work? Also, there was quite some absorption of the shorts before returning into the CVA. There's not any strong absorption. There is a little bit of absorption, the tiniest bit, right? You end up with lower low, right? Without a lower low in price, but it's quite minuscule. It's not really much at all. As opposed to some of the things we saw this morning, right? Like Delta going this much lower than where it was with price not moving at all. That's absorption, okay? So yeah, there might have been a little bit there. So I push back on that point. I'm going to push back on another point. I would argue, you phrased it, the breakdown didn't work if we accept in the CVA again. I would argue we never accepted outside that CVA, right? I was in the trade while we were attempting, right? It's fair if you want to, we definitely hadn't broken it down at the point of my entry, okay? Here to here. If you want to say that we've broken it down into this, that's fine, okay? Now we can say more than half of this rotation, right? From here to here, right? Just more than half, maybe 57%, was below, so you could technically call it accepted below. I get it. For me, it was kind of 50-50, and then next thing you know, we're all the way back up with another 50-50. So now it's like we're above, we're below, we're above, we're below, we're above. Not really a clean acceptance, not really a time acceptance, right? Not really large portion of a rotation holding below that area. So unfortunately, just a little bit messy around that area. And I would argue that it's a tough call. It's almost a toss-up during this sequence that I mentioned, because technically more than half the rotation is below. So you could say it. So that's fine. To answer your question, let's say we did read this as acceptance below. To now talk about getting long here. It depends on your plans. I obviously like getting long over here better than getting long here. There's a lesson for everybody, right? This is kind of a destination, a foe. This is an attempt, a failure, and now kind of retesting, right? We do get something of a contextual order flow shift, right? So I'm not against it, even as we speak. You know, if that was, again, something that you were looking for, something you identified, you want to be long, look at this micro poor high, EFGH, right? Stop run vulnerability there. Unfortunately, poor low as well. That's the nature of this crappy, dissonant, lack of strong narrative day here, guys. We got a poor low, we got a atrocious ledge, micro poor high. We're going above and below our next key reference here, the composite value low. You know, it's not been a great session to be greatly profitable. I've seen some guys on Twitter who crushed today. That's fantastic. You know, people who don't even trade NADRO, some people who do trade NADRO, they did catch this, right? And they rode it all the way down to the CVA low. Great. I talked about that. Go listen to the recording, right? That's a possibility if that's what you wanted to do that day. So yes, if you are more bullish than bearish through your narrative work, your ranking and distilling, you really want to get involved with the big picture, yearly, quarterly. You are more prone to focusing on structural trades from CVAs and PVAs. And you're willing to deal with the overhead resistance of the monthly area and the weekly area, which at this point you might have decent risk reward before we even get there, right? 24, 32, those are the first times you run into those levels. So it's not a bad trade idea. If a student of mine took that trade and had main narrative and supporting cast, talked about how it was in rhythm, how there had been a contextual order flow shift, how that was one of their playbook trades that they like to take, we're going to have no issues with that trade. So it's a great question. It's a different way of approaching it. I'm more focused, right? I don't want to get too involved with some other things right now. I'm more focused on my main hypo for the session. And that's why I was in the trade that I was in. I don't see this as a major failure. We still have a weekly time frame that's trying to work lower, right? We still have a rotational month that the most key rejection from up here, potentially working lower, right? We still have this area here, yearly VWAP, even though this is more bullish and this is more bullish. Again, dissonance, choppy, messy. That's why we're now, 2.5 hours sideways around this level. Which, by the way, kind of favors your trade idea. The fact that we might just remain more rotational, right? We did have a balance up here today, and now we have a balance down here. So maybe we just continue to stay more rotational as defined by DVA today. I don't see much absorption below 4,000. We haven't even traded below 4,000. Can you quantify how much absorption below 4,000? Oh, yeah. He's talking to Trader Biku. Yeah, so I addressed that point. I didn't see hardly any absorption down there. I think that was a bit of a misread. Anyways, I'll go to the next question. Unless we have one here. Okay. When creating a DMI, says Melanovel, when creating a DMI, do you make sure that the PVA distributions are most accurate? I'm not sure what we mean by that yet. I try not to use PVAs developed by the computer. I always take note of the LVN at very high time levels, and so my first trade was short from VWAP yearly. Well, VWAP yearly is not an LVN from this year or last year, so I would be pretty confused by that. Let me just answer the questions. Anytime we look at a value area, we do want to assess, is this value calculation by the computer, as you mentioned, is it fairly accurate? Is it, as I call, attached to actual balance in the market? It's a great question to always ask of any value area. And if the answer is no, then that weakens the strength and the usability and the dependability of that said value area calculation. Jake says, when Delta gets extremely dislocated from price, is that a time where you may start leaning on the footprint chart for confirmation with weaker narrative? Do you not trust the validity of any order flow tools based on whatever buy sell algo is operating within the market? I don't, at this time in my trading, I don't use a footprint chart at all. I don't knock using a footprint chart. I don't tell people don't use a footprint chart. It doesn't work. I do tell people don't stare at a dome. It doesn't work. But I do not tell people not to use a footprint chart. So again, I'm not using one currently. I don't feel like I need it for what I'm doing. I feel like my skills are good enough to see those momentum shifts, to see shifts in order flow using Delta, to have a good sense of discretionarily the speed of the tape, to be able to identify areas in which there are likely stop runs, all those kind of things you guys saw me narrate over the morning session and whatnot. So no, to answer your question quite simply, when price and Delta get extremely dislocated, do I move to a footprint or do anything else? No, I don't. I do tend to lean less on order flow in general when I see that large dislocation. And for me, a large dislocation is a very, very passively driven day. So if you have Delta that's headed down while price is headed up, like trending up while Delta's trending down, I call that very dislocated. It's because there's a passive buyer absorbing selling, and sellers who are looking for that liquidity and then nailing it when they see it, and a passive buyer who's happy to do that because their fill prices are better than they would be if they had to be aggressive and reach across. So I don't use that as a signal. I don't use it as any type of tell. It is what it is, and sometimes days look like that. I don't go to a different tool. I don't do any of that. Melanovel says, Merrick, can you please explain momentum and how you see that? Momentum is a lot of times I'll refer to how clean moves are, right? So if we have one bar that does this and the next bar does this, this, and then maybe this, and then this. There's a lot of momentum to that market. That's clean looking price action. There's not a lot of bar to bar overlap, as in these bars are not overlapping by much at all, just barely, right? Barely overlapping. It's moving up nicely. It's moving down nicely. There's momentum to that market. I'm going to talk more about momentum and how I see it, but this is one aspect. As opposed to what we saw this morning for a while, right, in various areas, on both a micro basis and even a macro basis, and what we've seen there on a macro basis, is the market going nowhere, right, and a ton of bar-to-bar overlap. Right? These bars are overlapping hugely. Some of them not as much. For example, this bar number 1 to this bar number 2, it's only overlapping there to there, right? It's not so much. but most of them are, majority of the bar size is overlapping with the prior bar. Okay. So that is messy, lack of momentum, not clean, right? Different ways to describe it. Another aspect of momentum is the angle of the price movement. This is a lot of momentum. This is not much momentum. Same for the downside. This is a ton of momentum, and this is a lack of momentum. A lot of times my bar-to-bar overlap, or lack thereof analogy, is going to coincide with that. So if we're going straight down, a lot of times the bars are going to look like this. And if we're not going so straight down, it's either going to be very overlappy like this, or it's going to be sequentially overlapping because it's actually not going anywhere, and it's a complex pullback, right? A flag. But if you run a linear regression through that, it's a weak angle, right? The closer we get to, call it 180 degrees or 0 degrees, right? Straight up or straight down, that's a lot of momentum. And the closer we are to 90 degrees going totally sideways, that's a lack of momentum. Those are the two ways in which I view momentum. Thank you, everyone, for confirming. I'm seeing in the chat now the children's thing is a seesaw. What was I saying? Seahorse? Saw. I was including horse in both. I was saying seahorse or sawhorse. It's a seesaw. There we go. Listening says, for us non-NADRO people, can you explain the difference between composite TPO and the other TPO? Yeah, composite TPOs are built custom composites of multiple days merged together as one, and the regular TPO chart is just single days and the overnight session. Brandon says, also, I used to see you have ETH 3-minute and RTH 3000 volume. Now I see you switching. Is there any reason for that, or just something you liked? That's interesting. Now that you mention it, I remember that. It made more sense to switch because I'm trying to think why I did it. Number one, my main DVA chart is the ETH. Okay. I glance at the RTH about as much as I glance at all the other contextual charts. When I'm staring at stalking entry, doing all those things, I'm looking at ETH. 9 times out of 10, my read of the intraday condition relative to DVA is on the ETH, right? And then I have a quicker paced, volume-based chart to look at there. The 3-minute is slower. It's less, inclined to, less fit to the type of trading that I do. I'm a little bit more shorter term with a lot of my decision making, especially around entries. So it made sense to have those two main priority things, both the ETH chart and that volume-based quicker time frame on the same chart. So that's pretty much it. Would it matter if it was on the other one? No, I would just kind of have to look at the upper one for my main rhythm and entry and timing read, and the lower one for my main DVA read. So it makes sense to have those on one chart and then have this one totally secondary as a chart to this. All right. I'm going to skip a few mail and novel questions just to allow others to get their questions in, and then we'll go back to it if we have time. We'll stop at 1 hour if we get there, if you guys have enough questions. Okay, we'll give Jake another one. When timing an extreme fade entry, how often would you say that you wait for a spring or uptrend pattern to form before entering versus timing the initial momentum shift? I found that generally take far more stops when trying to take that initial shift. When I'm timing, that is a time where it may make sense to scale into the position a little more cautiously to avoid taking the full 1 hour rip if it turns and ends up forming that pattern that we're talking about. So you're not wrong. I mean, just take a look. Let's say, for example, we're going to bottom out here in the S&P, right? We're going to make this bottom and turn. Look at how many newer lows that it made. You're here, then it's there. That's 2. We'll just call this one 3. We'll skip that one. 4. We'll call this one 5 instead of 6, 7, 8. 6. Right? That is the nature of the way current long-term regime volatility, the way this market is trading. Stop, run, stop, run, stop, run, stop, run, go. It's going to turn the other way. Stop, run, stop, run. Oh, it's going. Stop, run, go. Right? Very difficult conditions to a large degree. So let me reread your question and keep talking about it. How often do I wait for one? It depends. You could almost put up the seesaw again. Strength of the narrative, the tiebreaker of the order flow. What's the order flow look like? If order flows, if it's a mediocre opportunity, let's just say a run-of-the-mill opportunity in terms of thesis, narrative, and order flow says this is crap, you don't want to touch this, I'll probably have a high percentage of the time that I wait for more of a complex correction and hopefully a shift in order flow. If, however, the narrative is fantastic, order flow looks fantastic, I'm going to take that initial probe, right? I'm going to risk being early, if you will, before it does a couple stop runs or complex pullbacks and spring patterns or whatever and runs. So to me, that is, again, how I assess. It's not, I just, if I said, oh, about half the time I do this and half the time I do that, that wouldn't be nearly as valuable an answer as if I talked about how the context mattered for making that decision. Matt says, could you explain the difference between mini order flow and micro order flow? So I talk about it more so as contextual order flow and short-term order flow. Those are the terms that I use. Do algos take up the slack of keeping it in line? I don't know. There's no way of giving an answer for that. First of all, I don't worry if it's the algos or if it's humans or whatever. Doesn't matter. The order flow is the order flow. Yeah, so I don't know about the second part of the question, but what I call contextual order flow is delta holding above 0? Is it trending higher in general, right? Versus the short-term order flow, has there been a weakness on the most recent rotation? Has there been some strong absorption like we saw into this low, into the open, right after the open? Has there been late rotation capitulation, right? Has there been a kind of a little blow off thing and a sharp reversal? Those are all short-term things, and they can fit within some of the more contextual order flow, 0, 10K, general trendiness of the order flow, sidewaysness of the order flow. Those are more contextual reads. Contextual order flow reads, I should say. Why not merge Thursday and Friday's profile, says Stephen. I noticed some students who did that. So let's look at it. Let's talk about it. So how good was the value on Thursday, right? It's like we had the question earlier about value calculation relative to balance. In all actuality, we had something like we should either split the period that broke down like J, or maybe even leave J as the excess for the low and split K. So let's just split K. That, if you merge that, I don't have a problem with it. I never split apart that day to check it out. but that's probably the most ideal way to handle the recent sessions. It's just something that I didn't look detailed enough into, as I rarely ever do unless I have a pressing question about should I do this or not. To me, this was pretty straightforward. We traded up into this day, failed, and worked lower, right? So I wasn't really concerned with merging it. But when we look at it under more of a microscope lens, this makes sense as perhaps a merge, right? Let's see how much that changed versus the CVA that I have. Nothing. Not really any meaningful change. So it didn't matter. The balance was still highlighted there. But now we do have a day and a quarter right here, right? That's going to be a little tighter once I merge those compared with the older CVA that we have. So let's compare those. It's just below, right? It's 84 instead of 88. And on this end, it's 51 instead of 48. So it doesn't create much meaningful difference. The market is just simply confirming. I think that this is the best current approach. I'll probably change my charts to this. I think this is the best recent structure that one could have now that I look at it this way. But no, to answer your specific question, merging those days just straight up, no, I disagree with that. Where is reset everything? These 2 days, again, there's some balance up here. There's a tiny bit of balance here. The value is not great because it's an elongated skinny trend day. There is no main distribution, right? This day is certainly feasible. It's a good value there. It just doesn't match up, right? It just doesn't match up for me. If this day comes in and probably puts a little value a little lower to where it's a little bit in this and somewhat in this, then we'd start to look at a 3-day. Maybe we even start to look at putting all this together, right? We'll see. I tend to keep it as granular as possible until it's just undeniable that it's been a period of sideways. But yeah, I would not just merge these 2 days like this. Wouldn't do it. There's too much value that was built down here prior to going to this grindy uptrend imbalance, in which is a return in a sense to this kind of area, which is what we look for, but there was too much below it to merge them. Again, I think the K period split is pretty clutch. And then you got this, and then you got this. We're back at 1:30 Eastern, not 1. Oh, never mind. I don't know why isn't the schedule posted at the very top? And you would have gotten emails about it. Yeah, the schedule is posted at the very first post of this group thread. And you'd also have emails and stuff too. Someone else said, was it wrong to merge 321 and 322? I merged 321 and 322. Looks pretty good to me. How much emphasis do you put on single prints? So traditional market profile features, poor highs, poor lows, single prints, anomalies, ledges, opening range, you name it. Anything that's going to be in like Dalton books or the CBOE guide to market profile or whatever. In the hierarchy of all the tools that I use to determine what I think the market is up to, where it's trying to get to or whatever, those things are about as low on the priority totem pole as anything that I look at. A poor high or poor low is meaningful to the auction market process and tells me something. But for example, with today's profile, with excess on the high and a poor low, which would mean that the lows need to be revisited just on a standalone read, right? Lowercase b shaped profile. That would not matter at all to me. I'd feel better if there was excess on the low. I always like trading from the side where I have excess at my back. That makes you feel more confident in what you're doing. I get it. But if I had an A+ narrative to be getting long and we had a poor low, I'm still getting long, right? Back to the seesaw. Single prints in the middle of a profile, they're just an LVN, right? They're nothing more than an LVN on a day session periodicity. That's all it is. It's an LVN. You have multiple profiles above, which mean that there's some form of balance, right? You have single prints, and then you have multiple profiles below. That means that there's an LVN between two distributions, given that there's enough of those profiles to make a meaningful distribution. That's all it is, right? And yesterday, for example, that not actually yesterday, but for example, if yesterday had singles in between two distributions, again, that pales in comparison from our top-down, holistic, NADRO narrative reading approach. So what? There's an LVN yesterday. Maybe that's an area we can use to help us access that trade idea. Maybe it's an area that presents some small dissonance we can scale out into, but it's not going to affect the actual bias and the actual trade ideas. It's too low on the hierarchy. Great questions, guys. Can you show how you display the pre-market profit on the last day in the chart, please? Yeah, it's first of all, you have to, within your chart settings, you have to have it to where it is an actual evening session, right? So you have your session start and end time, and then use evening session, yes, and you have the rest of the 24 hours, right? So from 8:30 to just before 1500, then 1500 to just before 8:30. You have to have that. Once you have that, there's a setting within the profile where you can say, this. Exclude evening session profiles except for the last day. Set that to yes. So then it hides all the evening session except for the most recent evening session. Hey, Merritt, what was your logic to stay out during your morning analysis? I had trouble connecting earlier. I would say watch the replay. There was several areas where I thought about doing something, decided just to stay a little more straightforward today, not get too advanced with a bunch of scalpy stuff. I really can't answer that as a blanket statement. Well, no, I will. The blanket statement is we didn't have a great narrative this morning, so there was nothing for me to do. Not one of my hypos set up to really go after and get aggressive and trade. I compromised on trying to get involved a little bit with this one. I don't think it was an error to do what I did, but there was some compromise involved, so it was less than perfect. Less than perfect in terms of opportunity presented. All right, Trader Biku, and then we'll go back and take some of the male novel person. Have you seen a trend in expectancy in your trading over your career? Do you have a target range you aim to achieve? What range of expectancy do you want to see from your desk traders on average? You know, I don't actually finish the formula in terms of expectancy. Here's how I see it. I'm sure you guys have seen me do this. I hope you have. If not, you're in for a cool little tool or treat here. I used to run a custom spreadsheet that did this. It's not rocket science. If you want to do it, you can do it. Expectancy is the combo, okay, of win percent and the average winner from whatever sample size you're looking at relative to, okay, the ratio of the average winner to the average loser, right? So we call that the average win-loss. It's just a ratio. So it's normalized no matter who you are or how big you trade or how small you trade or whether you trade in micros or 100 lots, okay? And the point of break even looks like the following on this chart. It looks like this. If you are what we would call above or to the right of, you know, however you want to look at it, this line, you have positive expectancy. If you are below or to the left of this line, right, you are losing. Negative expectancy. So when I assess my own trading, when I assess desk traders, I more so have this model in the back of my mind, and I understand that if a trader is a high win percent trader, okay, let's say they live somewhere in this zone. Let's call this 50-50 right here, 50% win percent. If they're like up here at 60, 70, 80%, then I know that they can live on the lower end of risk reward. And by the way, to make this accurate, what's the break even point on this XY plot, right? If you are 50-50 in terms of win percent, well, the answer is 1 to 1, right? If you're 50-50, we're not taking into account commissions. Let's not get complicated. If you're 50-50 and average winner to loser of the same amount, right? You average $250 winners, you average $250 losers, you're 1 to 1, you're breaking even, right? So I know that traders who are high win percent, right? They maybe live over here as a profitable trader. I know that they can get away with less than 1 to 1, right? Let's call it 0.65, right, to 1. Most people don't live there. I have known extremely few traders who have had any success living there for sustained periods of time. Where you see more success with is traders who start to drop their win percent just below 50-50. And this would be kind of where I live as well. But really expand that risk reward, right, that you're looking for and achieving in the way you manage your trades to actualize that risk reward, because you skew risk reward in your favor through your playbook of trades that have better reward than risk. And you try it, and you come out just less than 50% or around 50%. And you know that you're making, 2 to 1, 3 to 1, and you're profitable. As if you're in the, if you're 2 to 1, you need to be, whatever, percent, 33% or whatever it is. And then 25% for 3 to 1, right? In terms of where the break-even point is. So you gotta notch above there, right? You gotta get better than 25% to break even, or you gotta improve the risk reward, right? So that's how I see it. That's how I look at traders. You can live over here and make a ton of money. You can live over here and make a ton of money. You can be kind of in this range here. And, you know, the further you work away from that curve, that's higher expectancy. Obviously, somebody running 50% 3-to-1 is, you know, doing very, very well, right? So anyways, I don't have like a range. I don't do the full expectancy formula and look at that. I look at all the stuff that goes into a trader's stats, right? I look at how well are they controlling their risk? What's their largest winner compared to their largest loser? And how do those relate as multiples of their average winner and average loser? How long are they holding winners relative to losers? What do their worst days look like relative to their best days? What percent of days are they profitable versus losing days? You know, are there times of day? Are there specific products, like they're making a lot of money in the NASDAQ and the S&P and they're losing a lot of money trying to trade gold? I look at all those things. I look at the quality of the work the trader's doing on their reviews and pushing themselves in terms of process goals and trying to get better at specific things that are gonna move that needle on this graph that we're looking at here. I don't get caught up in what is this trader's end expectancy number, you know. That's just my style, my take, what I do. Okay, let's see. Melon Novel says, hey, Merritt, when you talked about a weakened CVA, I feel you were moved on to another topic without making a conclusion. Can you please explain again what a weakened CVA looks like and what it means for DMI prep? No, I remember that. I finished the thought. Anytime you have a CVA where it doesn't really matter the situation, you've already, let's say, done this, right, which is this retest right here. And then let's say it does happen to come back and do it again. Okay, not great. It's a little bit weakened in terms of support level. And let's say all of a sudden we coming back down here again. Trade number 3 is not as good as trade number 2 and is not as good as trade number 1. The first one is better. The third one is problematic, right? Now we have a lack of excess for this current trading. We got excess from the prior value in trading, right? There it is. But now with the new profile, we're actually building something that's starting to have a ledge here, a lack of excess, and auction market theory tells us we could at least do a stop run through there, right? And then perhaps set up again and we could start the process again. Same thing for a breakout to the upside. If you break out, that's great. Shouldn't really come back here, right? Oh, well, it comes back here. Okay. It should not go back there again, right? And here we are back here again. That's not a place I'm going to be excited to buy in front of. So that's a weakening of any level, whether it's a CVA level or anything else. And I think the last question, Melanovel says, hey, Merritt, how much importance do you give to the overnight balance? During the prep, you didn't say much about it, but it's shown on the TPO. Also in my prep, I noticed the overnight balance created excess below the current composite value low, which is bullish sign. Does it make sense to look at this? So let's take a look. This looks like a beautiful overnight balance, doesn't it? When we look at the profile. Did we have a beautiful overnight balance? The answer is no, we really didn't. So this is the overnight session, this darkened area on my ETH chart. We really didn't have great balance. I understand that it makes sense. I think I mentioned this level at one point, the lower edge of the overnight balance. But and you know, until we ran through here, we had this poor high, right, with good excess on the low, and then here's the balance area. Then we broke it, and then we really started balancing above there. right? Which is kind of, it was exactly the same level as our weekly reference, which is why we're like, all right, can we hold this and just continue trending? Or is the predominant kind of a little bit more bearish stuff going to kick in because there's a lack of acceptance on that weekly picture? But I digress. There's just not like, let's go find another overnight balance. So here's one in which we might get some kind of big overnight balance, but in reality, there's some balance up here, and then there's imbalance, and then there's a balance down here. Okay. So again, perhaps the overnight profile would be misleading in terms of value. A little bit down here, and then a decent sideways kind of deal here. But again, nothing really. Now here's an overnight balance. Here is an area where it's just undeniable that we built balance in this range. A little bit of excess there, not really much excess at the high, not much, a little bit, right? We go get it there and then whatever. But this is where it's just, that's going to play a factor in my trading. If it's a big wide ranging thing, and it's like, okay, if we had to put some balance in, it's like there and there. Well, fine. But like, we really didn't just balance like this. Okay. So I look for the quality of that, even as I just look at the way that the market traded on bars. All right, let's make sure. Yeah, so that's the end of the questions for today there. Great questions, guys. Awesome stuff. A ton of concepts. We'll talk more about the actual trading that we did here today in the review right after the close. So we'll talk to you in a couple hours. Enjoy the break. We'll be back.